You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
This is the Options Industry Council's Wide World of Options. Before we start today's show, investors should know that options involve risk and are not suitable for all investors. You should not enter into an options transaction until you have read and understood the risk disclosure document, characteristics and risks of standardized options. This brochure is available by visiting www.optionseducation.org or by calling 1-888-OPTIONS. OIC makes no recommendation with respect to any financial firm. OIC does not make any warranty as to the accuracy, usefulness, timeliness, or the continued availability or existence of information created or maintained by others. Multiple leg strategies involve multiple commission charges. Opinions and strategies expressed by others are not necessarily those of OIC, nor does OIC endorse, warrant, or guarantee products, services, or information described or offered by such firms. Commissions, fees, margins, interest, and taxes have not been included in any of the examples used in this show. These costs impact the outcome of all stock and options transactions. Consult your tax advisor about any potential consequences. None of the information presented in this show should be construed as a recommendation to buy or sell a security or to provide investment advice. Welcome to the Options Industry Council's Wide World of Options. OIC was created in 1992 to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. OIC offers a variety of resources to those interested in learning more about options, including live seminars, webcasts, and podcasts. Check out www.optionseducation.org for more information. Now here's your host, OIC's Director of Retail Education, Joe Burgoyne.
Welcome to OIC's Wide World of Options. Thanks for joining us for today's show. Let's get started with industry happenings.
It's time to get a handle on the latest developments from the world of options. It's time for Industry Happenings.
In today's industry happenings, I'd like to briefly reminisce about trading floors. As some of you know, I spent 23 years on the options floor in Philadelphia. Great years, often very exciting times. I feel privileged to have participated in a marketplace that has essentially disappeared as we once knew it. In the old days, I'd say at least 10 plus years ago, pits had multiple brokers and market makers competing. These days, trading floors have little of the energy that once dominated. Technology is now king. But trading floors, I'm happy to say, aren't completely dead. Two rather new developments. One, the Box Options Exchange is planning to open a brand new options trading floor in Chicago sometime in 2017. And also, the NASDAQ PhilX is moving to a new location in Philadelphia this spring, and we'll introduce a new floor there. So the days of the old movie Trading Places, that's a great movie going back to 1983 with Eddie Murphy. Those days of robust floors with hundreds of professionals, running around and screaming on the floor, that certainly has changed forever, but I'm happy to say the trading floors are not gone forever. That's today's industry happenings.
It's time to break down the latest option strategies. It's time for Strategy Spotlight.
Joining us today on Strategy Spotlight is Kevin Baldwin, Director of Institutional Education for OIC and a new member of OIC's education team. Welcome, Kevin.
Thank you, Joe. Thank you for the invitation.
Hey, it's great to have you join the team, and really interested in picking your brain and allowing you to share some of your expertise with our listening audience today. Before we get into the topic of, today's discussion, really choosing an option strategy. How about if you tell our listeners a little bit about yourself and your career pre-OIC?
Well, sure. Thank you, Joe. I'm from California, but I came to Chicago in January of 1990 to work at the Chicago Board of Trade because I wanted to do derivatives. And the guy I was working for in San Jose, California at Merrill Lynch didn't want anything to do with derivatives. So I came to Chicago, and I got hooked up with the world's largest non-bank futures commission merchant. And I worked on the floor for a while, and I was teaching a 6-week futures and options institutional education program for about 6 years. And that was 5 days a week, 4 hours of lecture a day, and mostly Asian and some European institutions, regulators, exchange operators. And subsequently, I moved on to New York City, where I was for 5 years working for a broker-dealer and an independent introducing broker, where we did a lot of hedge fund business. And one of our clearing members blew up and scattered clients, so I ended up at the Institute for Financial Markets, where I was director of education for 8 years, and I traveled the world teaching and evangelizing futures and options education. And as you said, recently I got hooked up with OCC, and they have a new institutional focus, and I'm really looking forward to kind of breaking new ground for OCC here.
Me too. That's just a wonderful background. We're lucky to have you, and the sky's the limit for you going forward, I think. So we feel very fortunate and fortunate to have you today to share your wisdom. So why don't we get right into this whole idea? At OIC, we offer monthly educational themes, and the theme this month is choosing an option strategy. So, would you start to explain your approach, maybe on how you go about choosing an option strategy? Maybe that'll involve describing a little bit different option properties. Go for it.
Sure. Well, the reality is that options are complex financial instruments. And most of us think about, our market position in terms of price. If you own stocks or bonds, when the price changes, that's what creates a profit or a loss. But with options, they're sensitive to price changing, they're sensitive to time passing, and they're sensitive to volatility changing. So you really have a three-dimensional product, whereas with stocks, it's really a one-dimensional product. So that makes it sort of ups the ante in understanding how you're going to go about this.
And so, what were those three properties again?
Price, time, and volatility. And we quantify these with the Greeks, right? Delta represents price. Gamma represents the change in the delta, which is how fast the delta is changing. Theta represents the time. And Vega, or Kappa, if you like. Vega is not really a Greek letter. Kappa is. But that represents how much the premium changes when volatility changes by 1%.
So how do you take those three different components, analyze them, and then get to the point where you're choosing an option strategy? What are what's the mix?
So I'd like to boil this down to something that's easy. What's for dinner? Every afternoon we start thinking about dinner. What's for dinner? And you think, what do I have? What do I want? And what are my capabilities? And those three things together are going to help you determine what you're going to have for dinner. And you can think about your portfolio the same way. What do I have? Are you just long? Or do you have a long position maybe that's married with a protective put? And what do you think is going to happen? And how soon do you think that's going to happen? Is it going to happen in 1 month or 2 months or 3 months? It's hard to pin down. And what's the level of volatility currently? You could look at something like the VIX, or if you're in Europe, you could look at V stocks, and you look at the calendar. What's happening on the calendar? This morning we had the Bureau of Labor Statistics on the first Friday of each month reports non-farm payrolls. And that tends to be the most important economic statistic of the month. And it can really move markets. So if the number is, I think the number was 227,000 jobs this morning. But if it were 400,000 jobs, then people might think the Fed is more likely to raise rates maybe 3, perhaps 4 times this year instead of 2, maybe 3. And that can have a big impact on stock valuations. So the calendar is important. Looking ahead at what's coming out, earnings. Is Donald Trump going to give a speech? Are there Fed meetings? And you also need to look at Europe and Asia as well. Inflation numbers in Europe can send European stock indexes down, and there's some correlation with North American indexes to Europe. So if Europe catches a cold, it's likely that the U.S. is going to have a problem too. And also things like the People's Bank of China, or if Apple is launching a new product, that could have a big impact on broad-based indexes that Apple's a part of. So you try to look to see what's coming and sort of knit together a strategy of what's your opinion about price, what's your opinion about time, and what's your opinion about volatility. And if you don't have an opinion about something, then you don't want to trade it, which means you want to mitigate the effects of, say, time or volatility if you only have a price forecast. You don't want to trade time when you don't have a time forecast. You don't want to trade volatility if you don't have a volatility forecast. And that probably means a spread where you have some positive vega and some negative vega that are largely going to offset one another. So I like to think of it in terms of what's your opinion. Think about the ingredients that affects the option premiums and how you think those ingredients are likely to change going forward and how that might impact your strategy.
Okay, so a couple things. I just want to back up a little bit. You touched on, and I know we want to keep this simple because in my mind, even though options can be complex, simple is best. And you touched on a lot of things globally. And with the idea of keeping it simple, how can investors, do you have a favorite go-to resource? I mean, we're in finance, 5-7 days a week. A lot of our investors and listeners are not. Is there a best resource for them to, keep up with a lot of those current events? You talked about China, Europe, U.S. stats. Do you have a favorite resource or two for listeners?
It's an awful lot of reading.
Okay.
Reading
all right.
the news and understanding what's coming. And often people are sort of myopic and they're looking at what's happening this week and next week, but not looking ahead or further down the road to see what might happen in the summertime. For example, Greece has had some problems with their debt, and they've been bailed out 3 times already. And by August of this year, they're going to have to come up with 8 billion euro to make good on their debt, or they have to restructure it a 4th time. That's likely to cause some volatility in the summertime. We're not seeing that volatility today because the market's not paying attention to it, but it's coming. It's something that you can look down the road and see that there's probably going to be more of a sovereign debt crisis because Germany doesn't want to give a 1/16 of an inch to Greece in restructuring their debt because they'd have balance sheet problems. So
fair enough.
That's something that's coming.
Well, fair enough, and that would be my approach as well. I'm going to guess that the majority of our listening audience doesn't have the time to do that much reading. So let's narrow this down a little bit. You talked about the 3 different components there. Let's narrow it down to, let's say, the average investor has 3, 4, 5, 6 favorite stocks or indexes that they may have an opinion of. Do you want to take us through, some of the detail for initiating a position?
So, when I was a broker, I'm always interviewing my customers to see what they think is going to happen. And based on what they tell me they think is going to happen, I try to give them some ideas of what they might be able to do to position themselves more appropriately given what they think is going to happen. So I'll just stipulate that, let's say that I'm long stock and I'm bearish. I'm really nervous that since the Trump election, the market's moved up pretty sharply. And I think maybe that's overdone and we're, likely to see a pullback. So what can I do to protect myself? And I'll go even further to say that I'm really confident that the market's going to pull back. And that's a big point for strategy, is not only what you think is going to happen, but how confident are you? So if you're less confident, then you're going to take a different position than if you were more confident. So think of it in terms of delta, that if you're long stock, you have positive delta. That means you make money when the market goes up, you lose money when the market goes down. So if you were nervous and you were eager to hedge, you'd want to reduce your delta from a positive number close to zero. And if your delta zero, that means you don't make money and you don't lose money when the market moves up or down. So I'm so confident the market's going to go down that not only do I want to reduce my delta from positive to zero, but I actually want to make it negative. So I'm going to start out by buying a at-the-money put, and that's going to have a negative delta of about minus 0.5.
And can I just
going to combine? Yeah, please, Joe.
We're long stock, so are we starting with 100 long deltas per se?
Yeah. So
Okay.
let's say we start with 100 long deltas,
Yep.
and I buy some puts, and that gives me negative 50 delta. So plus 100 minus 50 gives us a residual delta of plus 50.
And so, excuse me 1 second. So you bought a put with 50 delta. So, the deltas in the puts can vary. So a 50 delta would be approximately an at-the-money put, fair to say?
That's right.
Okay.
So the combination of the stock and the long put gives me about a plus 50 delta.
Okay.
And now I'm going to add a short in the money call option that has a negative 75 delta. So the stock plus the long put gave me a plus 50, and then I'm adding a negative 75, which gives me a net across all three of minus 25.
And is there a name?
25 means, well, it's a reverse collar.
It's a synthetic collar.
A reverse collar. So when you're long stock and you're buying at the money put, you have a synthetic long call that's at the money. And when you sell an in the money call, well, you're long the high strike call, you're short the low strike call. That's a bear vertical spread. And this happens to be a synthetic bear vertical spread, which is called a collar, reverse collar, or some people call it a fence. A fence and a collar and a reverse fence and a reverse collar are the same thing. Just really depends on where you're from.
So you're bearish, and you have the stock at point X, and the static delta is minus 25. What happens if the stock goes down?
So it's like if you were short 100 shares, then you'd have a minus 100 delta. But we have a minus 25 delta, which means it's equivalent to being short 25 shares.
And if the stock goes down, does that stay static at 25 short deltas?
It's going to move a little bit. Not much, but it will move a little bit. And the reason is that since I'm long puts and short calls, the gammas are going to offset largely, the thetas are going to offset largely, and the vegas are going to offset largely. So it's going to leave me with a net negative delta, and it's bearish. So if my point of view is correct and the stock market sells off, not only am I protected, but I'm actually going to make some money on the move down in the stock market.
That'd be a good thing. So taking that a step further, let's say your forecast is accurate. Do you have a particular approach to when to take profits?
Yeah. Well, in this particular example, we're talking about a reverse collar or a synthetic bear call spread. And that particular strategy has a finite amount of risk and a finite amount of return. So let's say that we start where the risk is $5 and the potential profit is also $5. So after the market moves, my risk and reward are going to change with the market movement. So if the market moves down, then I'm making money, and it might be the case that my risk is now, say, 9, and my potential profit is only 1. So I started out with a potential profit of 5, and I've already made $4, and there's only $1 left on the table. And if that's the case, then it's prudent to take your profits and move on. So you've already made 4 of the $5. Go ahead and offset it. What's your next opinion? What's the next strategy that you want to look at? Whereas if you're wrong and the market rallied, now you might have risk of maybe $1 and potential profit left of $9. So the market moved against you. You've already suffered a loss, but there's only $1 more that you can lose, and there's $9 that are still out there on the table. So in that case, you probably don't want to offset your position. You've already taken most of the heat. You've only got $1 more to lose, and with a vertical spread, time's not an issue because the thetas are offsetting one another. So you've got time. You're not paying a lot of time value decay. You're not long volatility or short volatility because the vegas are offsetting. You're left with a delta position. So essentially you've reduced the slope of your profit loss line, which means you don't make as much money when you're right and you don't lose as much money when you're wrong.
Good explanation. And if it goes against you, and your forecast hasn't changed, and you have the potential, as you say, to still make $9, maybe that move to the downside happens, just not maybe as quickly as you anticipated, and hopefully before that synthetic expires.
So the real
go ahead.
The real message that I'd like to get out to your audience is the flexibility that options provide, and they are powerful financial tools, almost sort of like duct tape, that you can use them in almost any situation. What's your point of view? What do you think is going to happen now, going forward? And how do you want to be positioned in terms of your price exposure, your time exposure, and your volatility exposure? So it's a little bit like herding cats. You got 3 different things going on, and they're all moving at the same time. And where do you think they're going? I'd like to say it's similar to a Rubik's Cube. It's a 3-dimensional problem. And you have to be thinking about all 3 dimensions, because if you don't, you're more likely to get bit. So you want to understand what you think is going to happen and structure your option strategy to take advantage of your opinion and not leave exposures to things that you don't have an opinion about. You want to mitigate those things.
Oh, Kevin, I like the way you explain things. You hit on some analogies that are all close to my heart. Dinner, duct tape, herding cats, that one we're going to have to talk about offline a little bit. But, I appreciate your wisdom today. I'm sure our listeners do too. And, really looking forward to working with you more at OIC in the years ahead. So thanks so much for joining us today on Strategy Spotlight.
Thank you for having me, Joe.
It's time to meet the movers and shakers from the world of options. It's time for Profiles and Perspectives.
Joining us today on Profiles and Perspectives is Stefanie Kammerman of Stock Whisper Trading Company. Stefanie, thanks so much for joining us today.
Well, thank you for having me, Joe. Great to be here.
We got a wide array of listeners out there. The whole idea of Profiles and Perspectives is to bring in industry pros like yourself who our listeners may or may not be familiar with, and just to introduce you to possibly a new audience. So would you tell our listeners a little bit about maybe how you got into your business and your career path?
Sure, I'd love to. Well, people call me the Stock Whisperer because they think I'm psychic, which I'm going to tell you right now, I am not psychic. I'm a tape reader. And particularly, I follow the dark pool, which most people think is invisible, but it's not. And I'll get into that in just a bit. But I started out at the largest prop firm in New York called Schoenfeld Securities. And I'll be honest with you, I didn't know anything about trading, nothing. But I got this great job as an assistant to one of the best traders there. And I sat in a $1 million room. And I mean, people would pay money, Joe, to sit where I sat in there. I was actually being paid, and I was learning how to trade from the best traders in the business. But the best part was that they sat me in front of this green, glowing machine called an Instinet machine. And that was the first dark pool. Yeah, dark pool execution order system. Only the big firms had them. They cost thousands of dollars to have them, but it was my job to really input all the orders. Now, a lot of the big guys like Goldman Sachs and Barclays, they would hide their big orders in this alternative exchange, this Instinet machine, because they didn't want everybody to see where they were buying and where they were selling. And I was privy to this information. I got to see where they were loaded up to buy and sell. And so when anybody from
trades, right? I don't mean
stock trades, correct?
Yep.
Yeah, no, this was all stock trades. And by seeing that, Goldman Sachs wanted to buy, millions of shares on Microsoft at 74, we would go in and we would buy, and we would put our stops below it if it traded below it, or where they were selling. And so it gave us a huge advantage. It was fantastic. And, this was back in 1994.
Okay.
So a long time, this was going back quite a few years. I mean, people didn't even trade from home back then. You actually had to be at a prop firm to trade, or you called your broker up on the phone. That was really the only way. And so I did really, really well. I ended up trading for another prop company, on-site trading. A few years later, my boss moved to Florida. He didn't want to pay New York State tax. And so on-site trading gave me $250,000 to trade with, which was phenomenal. I mean, I was the first woman back then. I worked with about 100 men, and it was great. I trained my whole table how to trade using an overnight swing system combined with dark pool. And it was great. And then I took time off and to have some kids, got married. And I thought I could do this from home, but I could not. I mean, we didn't have anything at home like this. When you go from an Instinet machine and a Bloomberg to dial-up, right, that was not very good back then. So I took some time off, and I went into the music business. That's a long story. And then I came back into the stock market in 2009. And
what I noticed, time to come back into the market. I hope you came back on the long side.
Was fantastic, actually. I mean, what's fantastic about it is that technology changed. That's what was spectacular, is that I had everything I had at this old prop firm. I had it at home, the software. I had access to dark pool. and that's the most phenomenal part, is that I use Charles Schwab Street Smart Edge platform, which anybody in the United States can get. And what's great about it is they have dark pool data feed, and I use their block trader. Lightspeed also has it, LiveVolt Pro. There's a few companies out there that have dark pool data feed. And this is the secret. This is the secret to trading options. Because if you know that the big boys are buying or selling on a big stock, for example, they were selling this morning. They were a huge sell order on FCX, Freeport, and at $16.61. Actually, sorry, huge, 1.8 million trade go by in the dark pool. And by seeing that, you can catch the options market off guard.
Let me ask you this.
Sure.
So you see that trade go up, through the dark pool. How do you know who, the buyer versus seller is? How do you know the direction?
Right. Well, we've been following Freeport. We've been actually in a long-term swing on this. So we've been following all the big trades every single day. So I can tell you exactly where the big boys were buying. And then as soon as you see them, we had no volume yesterday. And all of a sudden today, and it was hitting a major resistance trend line. So I used technical trend lines in conjunction. But the fact that there was no volume yesterday, and we actually saw heavy volume on the 1650 puts yesterday. You can look at that. I mean, it was unusual. That actually caught my attention first. And then today we spotted massive prints on the actual stock at 1661, and it just dropped all the way down to 16. So this is actually a trade we took in our live trading room today. And that's really what moves it, especially the dark pool. The dark pool comprises 40% of all the volume being done right now is being done in the dark pool. And most people think you can't see it, but you can. There are real-time dark pool trades like the one I saw today on FCX. And then there are the late trades, and those are the ones that are the most manipulating ones. That's how we know we're going to be in for a very large move. When we start to see like 20 million, 30 million late prints coming in. And so, this is how we discovered all those corrections. We saw them selling way before Brexit. The craziest trades that I ever saw in the dark pool were the ones I spotted back in March 21st. We spotted the largest trades I've ever seen in my career on TVIX, TVIX, which is the fear ETN. When markets get nervous, when corrections happen, usually we'll see large trades on TVIX. And so we saw these 10 million blocks, another 6 million, another 6 million. And I didn't know what was going on at the time, Joe, because I was like, we weren't in the middle of a correction. I didn't see any of those late dark pool prints, sell prints. And I didn't know until the next day when Brussels had a terror attack. Biggest terror attack ever in history in that country. And for the first time in my career, I was speechless because it made somebody was trying to profit off of it and knew in advance. I mean, that's the only thing I can think of. I mean, I've never in my career have seen the largest print ever on a fear ETN, and it was the day before a terror attack. So I did take pictures. I posted it on my Twitter feed. If anybody's interested in going back to see what that looked like, you can see the pictures. But I saw sell prints in the dark pool before Wells Fargo. The news 2 days before the fraudulent bank account news came out, we spotted a massive sell print on Wells Fargo. 40 minutes before the FBI announced that it was going to reinvestigate Hillary. We spotted a very large trade on SPXU, which is the bear ETF of the SPY. So it all starts with the tape in the dark pool, and it doesn't matter if you're trading stocks, if you're trading options, if you're trading futures. We can all benefit on this knowledge. And the great part is that it's available. Anybody at home can gain access to it. And I run a live trading room where I share my screen. I teach my traders how to spot the unusual ones and how to trade them.
So tell me,
it's great.
tell our listeners how they, can tap into your live stream.
Oh, sure. I run a room. You can go to my website, www.thestockwhisperer.com. It's online, and I am in my room. I share my screen all day from around 6:30, 7 a.m. Eastern Standard Time till 4 p.m., and I'm obsessed. I trade all day long. I do 2 audio meetings a day. We have a couple hundred traders in my room right now, and we all work together. It's a community. And I've trained a lot of these traders, and I would say 50% of my traders in my room trade options. We have an options meeting every Tuesday. One of my traders, Ricky, she's phenomenal. She does an options educational meeting teaching traders, how to trade around earnings, how to trade around specific prints, all different things. And we have beginner traders, intermediate traders, advanced traders. And it really is amazing to just be able to, number one, share the same passion with other people and be around them all day, but to learn from each other and to call out stuff. Like yesterday, one of my traders, Carl, he called out a massive 3 million print on AMD. And this was great. This made my day. I shorted it off the print. It was $12.61. And, AMD, we were bullish on it from $10.50 from 2 days ago. I do a free YouTube video every morning called The Whisper of the Day. So anybody can go to my website and join it for free. Been doing it for 3 years, and it was in my whisper of the day to buy and do a bullish above $10.50 because we had spotted pre-market buying coming in, refreshing on the bid, which is how they buy a lot of shares without moving a stock, and they kind of replenish the bid. So they only put up 100 shares, and they get hit, and all of a sudden they put up another 100, another 1,000, another 500, another 1,000. So I started to see that at the 1050 level in my room, which is great because my traders are there, and I'm teaching them what it looks like in real time. And so in the Whisper, I talk about it in my video, and it was a phenomenal trade. But all of a sudden yesterday, Carl calls out, hey, there's a 3 million dark pool sell print at $12.61. And people that were long got out of their longs. I personally went short on it and had a great trade. It's actually trading below that today. It's at $12.18 right now. It's a community, and we're all calling out high probability trades. You know what it reminds me of? It reminds me of my old trading table where I trained this group of guys how I traded, how to find these high probability setups and trade on the dark pool, and then they would just call out great stuff, all day long. And it made us all better traders because instead of me just finding like 4 or 5 positions, I had like 20 to 30 amazing swings, overnight. And so we day trade, we do overnight swings, we do long-term swings. Right now I have a few.
That's actually something I wanted to ask you about. So sure. The whole trading community thing is just, as you say, it's high energy. Everybody learns from one another. More opportunities probably because you got a lot of people involved. You've mentioned swing trade. What's that?
Sometimes you don't see something, Joe. Like sometimes you'll be looking at one thing and all of a sudden somebody disagrees with me, which I love, So there's traders that, hey, you know what, Steph, I see this differently. Look at my chart. And they post their chart up and I go, I didn't see that. Thank you. And they just saved me thousands of dollars. So that's what's so great. But having great traders, and so and training.
So let me ask you this: for folks, and you said you got beginners, intermediates, and an awful lot of advanced folks. A lot of questions. Earlier, you were referencing FCX, and you already had a position before something big went down. How do you go about? And I want to cover a lot of different things. How do you go about, picking individual issues? That's number one. That's what I'm after.
Number one. Yeah, I only enter stocks that are liquid. They have to trade 1 million shares a day. That's a key factor. And I don't trade biotech stocks. I don't do drugs.
Okay. I got it.
They get halted. Yeah. So that's just number one. But what I focus on is I'm completely technical. I'm a technical analyst. So I will draw trend lines, channel lines. I will use a 4 exponential moving average and an 8 exponential moving average on my daily chart. And a lot of times when the 4 crosses over the 8, that signals a massive change in momentum. But I need to see volume. I got to see volume come in. Volume is my number one indicator. That's the key. And dark pool, big prints. If we close above those big dark pool print levels, momentum is changing. I see room on the channel. I use moving averages. I use pivots. I love pivots. Person's pivots, Camarilla, Pivot Boss pivots are phenomenal. I watch the futures in conjunction with stocks. So I love to trade gold, oil, natural gas, copper, the SPY, because we have all the futures. The futures are there, and I watch the volume on them in the morning, especially, for levels.
You mentioned charts, okay? So, you're doing different trades, some real short term, intermediate, longer term. If, for, your typical trade, are you analyzing daily charts? You're talking a lot of crossovers. A lot of people use really 5 and 10 minute charts.
Even as a day trader, yeah.
Good. That's what I want to know. That's what I want to understand for our listeners.
Yeah, most people think that day trading, you should just be staring at a minute chart. I can't tell you how many people come in to my room and they're like, I keep getting shaken out every minute. And you have to look at the bigger picture. If the gravitational pull is to the upside in the bigger picture on the daily chart, right, your day trade on the long side is going to work out, is going to have such a higher success rate. I don't like to go against the trend unless, there's a massive big print, which we had on AMD yesterday. So AMD momentum's been positive. It's been going up, making higher highs. But here's this massive 3 million print. And I had a trend line drawn on my chart where it was hitting at the same time. So in my mind, look, we're trading against computers. And computers are designed to sell, right, at the top of these trend lines. And they're programmed to buy at the bottom of the trend lines. And as long as you can really learn how to draw these lines, and this is what I teach. I'm in my room all day and I'm drawing trend lines and I'm showing the traders, so here's how you draw these lines, and here's the big print, and here's where they're selling. And you know what? We'll go short, but I'm putting my stop just above where the prints are. So always have that stop loss in place.
Okay, and that's so important. I got it, but I think, especially our listeners who, are in the market pretty actively, I think it's important for them to understand your perspective on the daily charts as opposed to a lot of these really shorter term things, which I'm in total agreement with you. I think it's a bunch of noise. So thanks for clarifying that. Let's dovetail just briefly into the option space. Okay, so you're tracking all these equities, and how do you like to employ an options trade? Kind of briefly.
Sure. So back in, here's a good example on Hewlett Packard. Back in October, this is just one example. I mean, these things happen all the time. But back in October, we started to see around October 25th, 26th, we started to see massive prints coming in. And it looked like buy prints at $13.90. And I took pictures. I posted them up on Twitter. They're in my Whisper of the Day. So if anybody wants to go back and see what that looked like and relive through that trade, absolutely you can go and look that up. But we were also coming down to a really good moving average that I love. I'm not sure if you guys all have it on your charts, but it's the 120 simple moving average on the daily chart, and I love it. We were coming down to it, and here are these massive prints. And so I had a couple options to do on, how am I going to buy it? So we were going into earnings season. Now, Hewlett Packard's earnings weren't coming out for another couple of weeks, but still, there's always that chance that a company could warn or something can happen. So I chose to buy the 1450 call. So it was like 14 cents. They were so cheap. The option market had no idea that there were these large buy prints coming in on Hewlett Packard. And so for me, it was like I'm risking 14 cents. If I come in the next morning and a negative report or something happened, that was my stop loss, 14 cents. And so these options ended up going to like, I got out at 92. I think they went way higher. I always get out early. I never hold for the whole thing, but that's all right. I don't try to peg the top. 15 was my target, so I used the stock for my target. So again, these buy prints were at $13.90. My target was 15, and I got in the 14.50 calls. And so, when it hit 15, normally that would have been the top, but it kept going, which is fine. A lot of my traders who missed the first leg got in the second leg. But I didn't in that trade. I actually got into other stuff. But that's how I use options as a vehicle.
Great example.
Yeah.
And the way you dovetail it, with your forecast at 15, not being greedy and getting out on a great trade. I mean, that's just good trading discipline. So, Stefanie, this is why we have, OIC's Wide World of Options and Profiles and Perspectives to introduce industry pros like you to our listeners. So, I think you've offered lots of information today. Before we wrap it up, please, if you would, reiterate to our listeners how they can, find you.
Okay, sure. Well, I'm on tour as well right now with the Money Show and the Traders Expo. I'll be in Orlando next week. If anybody's in the Orlando area, Florida, or you want to come fly in, it's really nice there, by the way. It's like 80 degrees. So if you're in the cold, why not come out there? February 10th to the 11th, I'll be doing 3 presentations, and then I'll be in the New York Traders Expo on the 27th and the 28th of this month in Times Square at the Marriott. Really nice hotel, great show. I'm actually trading live in this show, doing a few different live presentations. But it doesn't matter if I'm on the road. I always bring my laptop, whatever hotel I'm at. I am running my live trading room. Because I hate missing one day of trading. I'm definitely, I've been doing this for 23 years now, and I love every single day. I'm a trader. I'm a trader first. And I do a lot of workshops for those people that can't be in the room and they want to learn how to trade while they're still working. I have tons of workshops you can download from my website. And I also do a live class, 2-week, very intense live class for those people that are really, really serious and want to make this your career. I teach you everything I know in 2 weeks. It's called boot camp, and we cover from day trading to overnight momentum swing trading to longer trading. So those are all the different ways if anybody's interested in learning how to trade around the dark pool. And I'm easily accessible, Joe. I'm here. I am here all day. I'm trading. So my traders ask me questions all day. What is that? What is this? And this is how I learned. I learned how to trade from amazing guys that took the time and really walked me through why they were getting in, why they were getting out of trades. And I think that's really the only way and the best way to learn is you have to actually see somebody doing it and explaining, why am I getting in and why am I getting out? Most people do the opposite, the wrong thing. They're getting in when they should be getting out. They're chasing. They're not disciplined. They haven't mapped out trades. I mean, it's not gambling. When people ask me what I do for a living, and I tell them, well, I'm a trader. I couldn't gamble like that. And, they're right. They would be gambling because they're not educated. And another thing that, before I go, is that most people do is they think that if they're successful in their career. So we all go to college. Well, most of us go to college and we get a master's, and we become a doctor, an engineer, a lawyer. We took years and years to study for this career, and we've had success in it because we took the time to really hone our craft and learn everything we need to know. And yet these same people think that they can learn how to trade in a day, a week, a month. They just start trading with money that they've worked so hard with. And, you really have to paper trade until you see that you are successful. You're doing this right. Respect your money and learn first. And I'm not going to tell you that I could teach you how to do it in one day. But I'll be honest with you and tell you that it really takes a year to master. I always tell my traders, it takes a year. You want to go through 4 earnings seasons. Not to say you can't make money before a year, but to really master and to say, hey, I've seen this so many times before, and have that confidence. 4 earnings seasons. And you definitely will learn a lot. But if you trade with your money, trying to teach yourself and learn through that, your account's going to be depleted before you learn. And now you're focusing on money and not trading properly. And, people come to me all the time, can I make $250 a day trading? And, I don't even think about money, and why put that number, right? That monetary value of 250. Why not make 1,000 or 2,000 if the market is great? And when it's not great, we don't trade. But if you're thinking about money, you're not going to trade properly. If you're up like $230 and all of a sudden, I need to make another 20, and now all of a sudden you lost on that trade, and I got to trade more. And now you're trading in the middle of the day when trading isn't good, and now you've lost everything because you had that dollar amount in your head that you needed to make. And so, again, trading, if this is a career, you have to take it serious. Education is key, and give yourself time and discipline. And so that's really the best advice that I can give to, all the traders that are tuning in right now. Take the time and respect your money and enjoy the process. I love it. And, I'm learning every day. Every single day I'm still learning. And I think that's the key. No trader knows it all.
With a little bit of luck, you'll develop some passion for what you do.
Yes. You have to love it. Now, if you don't love this, do something else. Like I can't wait to wake up in the morning. You have to have that, that appetite for it. I think in anything that you do, you got to love it. Or else. Yeah. Well, so thank you. Thank you so much for having me.
My pleasure. We'll look forward to seeing you out on the road, and thanks for all the advice and wisdom you've offered to our listeners today.
Oh, great. Thank you. Have a great day, everybody.
It's time to upgrade your options toolbox with cutting-edge trading platforms, devices, and information. It's time for tools, resources, and good reads.
Thanks for joining today's Tools, Resources, and Good Reads. First, I want our listeners to consider investigating options play. That's today's tool. You can find it on the web at www.optionsplay.com. You can take a tour of the site and also sign up for a free trial. Now, what I especially like about Options Play is that the tool combines a technical opinion of the underlying, along with an option strategy that aligns with the opinion of the underlying. I assure you, there's much more there as well. Check it out, optionsplay.com. Now, the resource I want to mention today, and I've mentioned this one before, is our very own website, optionseducation.org. There's so much there, you can actually get lost, but as a resource for free options education, there isn't anything better. There is this one area called My Path. It's an assessment test, and I would urge all listeners, if they haven't done it before, to try it. Basically, you take the assessment, and after the results of that come in, OIC will download appropriate level education modules for you to study. And of course, you can study them anytime, 24/7. So that's the My Path assessment. There's also tons more podcasts on almost every options topic and strategy, tools, options chains, most actives, and even a whole area for financial advisors as well. That's optionseducation.org. Please be sure to get familiar with it. And today's good read is both a book and a movie. Now, I'm no fan of Hollywood's depiction of Wall Street. I usually don't even watch Wall Street movies. but Michael Lewis authored The Big Short, and Hollywood did a great job, in my opinion, of turning Lewis's book into a riveting movie about the recent financial crisis of 2008 and 9. As one who spent 23 years on an options floor trading in Philadelphia, I can attest to the fact this movie really hits the mark on both how markets work and also how traders think. I personally got to watch it again. And if you haven't seen it yet, I hope you check it out. And if you've seen it, I would urge you, maybe check it out a second time as well. That's today's tools, resources, and good reads.
It's time for a nostalgia break. It's time to take a look back.
Today's Looking Back, we'll take a quick look at recent volatility levels just before and after our recent U.S. election. I'm going to use the VIX, the S&P 500 30-day measure of volatility, as our volatility proxy. I'll start in late June. Up to that point, the VIX, generally speaking, traded around 15 plus or minus a bit. Now, the Brexit vote was in late June, and VIX spiked from the mid-teens to 25. But as quickly as it spiked up, it pulled back, and to even lower levels, down to about 12, and really traded in a fairly narrow range around 12 for most of the summer. As quickly as that VIX, retreated from 25 down to 12, you think long positions had trouble getting out? My guess is yes, indeed they did. From there, we got to early September, and after a low volatility, boring summer, the market sold off 400 points on Friday, September 9th. The VIX once again spiked, this time to 20, but again, it quickly retreated as the Dow rallied close to a couple hundred points that Monday, September 12th. From September right up to the November 8th election, VIX moved in a range of, say, 13 to 18 with an occasional high of 20. That 20 level being by far the most recent high just before the election. Following the election, as many of us know, the markets have rallied aggressively, confounding many, and VIX current levels have sold off again down into this 12 level with continual lower highs since the November 8th election. Now, with all the uncertainty of the new administration, these current low VIX levels in this low double-digit area have many wondering, how long can VIX stay at these levels? The markets are never easy for those who've been in them for a long time. So that's our recent journey through VIX. Hope you've enjoyed it. That's today's Looking Back.
Investors should know that options involve risk and are not suitable for all investors. You should not enter into an options transaction until you have read and understood the risk disclosure document, Characteristics and Risks of Standardized Options. This brochure is available by visiting www.optionseducation.org or by calling 1-888-OPTIONS. OIC makes no recommendation with respect to any financial firm. OIC does not make any warranty as to the accuracy, usefulness, timeliness, or the continued availability or existence of information created or maintained by others. Multiple leg strategies involve multiple commission charges. Opinions and strategies expressed by others are not necessarily those of OIC, nor does OIC endorse, warrant, or guarantee products, services, or information described or offered by such firms. Commissions, fees, margins, interest, and taxes have not been included in any of the examples used in this show. These costs impact the outcome of all stock and options transactions. Consult your tax advisor about any potential consequences. None of the information presented in this show should be construed as a recommendation to buy or sell a security or to provide investment advice. You've been listening to the Options Industry Council's Wide World of Options. If you have questions about anything you heard on today's show, email Joe Burgoyne at options@theocc.com. Or you can call OIC's Investor Services at 1-888-OPTIONS. Interested in connecting with OIC on social media? Like the OIC page on Facebook. Follow them on Twitter at options_edu. Or join their group on LinkedIn. Thanks for listening, and be sure to check out our next episode of the Wide World of Options.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.